Bring in top chip analyst Stacy Rasgon of Bernstein Research. It's good to see you. Every time I talk to you, and then, look, you just upgraded the stock like I know you're even laughing. You know exactly where this is going. You upgraded it about a month ago, about as half-hearted an upgrade as you will ever find an analyst do. You still don't like it. But
yes,
what's
the title of that note was
happen?
"We Hate This Call," right?
You hate this call. You hate the stock. What makes you like it again? Are we going to find anything today that tells you that it's now time to get back on board?
Yeah, I mean, look, hate is a strong word. I used it, but it makes it personal. It's not personal.
Thank God you said you used it. I didn't use it.
True. No, what we're looking for, the big question is it finally as bad as it can get? I mean, that really is. And I guess we'll find out in a little bit, but it's pretty bad. As you mentioned, it's one of their biggest quarterly losses in history, if not the biggest. Gross margins are going into the toilet. You know, the revenues, I mean, it's just incredibly bad. That's kind of what investors are looking for, right? You want to like get the feeling that it is as bad as it can get. It can't get any worse, and that hopefully as things get into the back half and beyond, things can start to get better. I mean, that is the call. And the reason we upgraded it a month ago, it wasn't that we thought that their strategy was on the right track or anything. It just, for the first time in forever, I go at least into the back half of the year, and I'm actually finally above. And the reason is, you know, just given some of the current dynamics, the market's weak. They're even weaker. They're under shipping. They were over shipping. They're under shipping now. At some point, that has to normalize. And you start to look at where the numbers are versus some of those likely dynamics. And I was forced to admit to myself that maybe into the back half, the numbers are too low. And so that gives you something, some kind of grounding that a bottom that could be in.
Do you think, let me interrupt you, and I apologize. Do you think PCs, let's start with PCs. Do you think PCs have bottomed or are close?
I think if you look at Q4 and Q1 PC shipments, they were very bad, but they were almost dead in line with pre-COVID, typical pre-COVID levels for Q4s and Q1s. So we're kind of back to that, you know, 250 to 260 million kind of PC shipment run rate versus, you know, we did 350 million in 2021 or whatever it was. So we're kind of back to a normalized level. The CPUs are the things that Intel and guys like AMD ship. They were well below that. So in Q4, CPUs probably undershipped those weak PC numbers by 20 or 25%. To fit Intel's horrendous guidance for Q1, you kind of have to assume that the CPUs are undershipping by even more. And they're making up for the overshipment that we had in prior quarters. But at some point, that has to normalize. So even if PCs stay weak, at some point you're no longer undershipping that weak market and you get a lift as things normalize. So I think that has the prospect to happen as we get into the back half of the year, yes.
So let me ask you this then, for the other big issue, which is data center. And whenever, and look, I'll be frank, I don't know the answer to this question, and I'm presuming that you know much more about this than I do. AI, does Intel's data center have anything to do with that business? And why don't we hear about AI at all related to this company like we do almost everybody else, it seems, these days? And will it be a big player there?
Yeah, well, they're going to try, right? And so they do have a roadmap of things like AI accelerators, similar to what NVIDIA sells. I would say it's not going very well. They've gutted some of their forward roadmaps in those things. And it's a tough road to hoe. Like NVIDIA also has a massive software moat that's hard for others to break into. On the CPU side, though, there are some AI applications that actually do run on CPUs, and their new server product, it's called Sapphire Rapids, does have some sort of specific accelerators on it for some of those workloads. And some of the AI servers that are shipping now that have a lot of these, say, NVIDIA GPUs, they do have some CPUs in them. It's much more GPU versus CPU, but it is dragging some of those, in particular these Intel Sapphire Rapids CPUs along with it. So at least in the near term, they're probably getting some of that. But I would say over the long term, as more and more workloads become accelerated and are taken up by some of these other pieces of silicon that are not CPUs, that is a headwind that Intel is going to have to deal with one way or the other. Yeah, they're trying.